Okay, welcome to episode 9.3 of rental house versus high income ETFs. Quick reminder, we sold most of our rental properties in this house right here. We took $70,000 of the proceeds, which was pretty much the proceeds from the house, and invested it into some high income ETFs. And this experiment is to see how my ETFs would do compared to how things would have went if we would have kept this house. If you're new to this channel and you like this type of stuff, I'd like it if you would subscribe so I can get to 1,000 subs. So let's see how we're doing here. So we have equity. We have 79,798, getting close to 80,000. We have 68,776 in margin. I'm using margin on this account. And like I've explained in a lot of the other videos, I consider margin kind of like a home equity line of credit or a second mortgage, however you want to put it. My margin interest is about 6%. I have about $40,000 in buying power and margin right now. I don't plan on abusing that any. Some people say I'm abusing it already, but whatever. So anyhow, what do I own? Let's start down here at the bottom. I started out, I got 2,700 shares of QDTE. That's a weekly paying covered call ETF. If you don't know what covered calls are, I do have a video, or there's 1,000 other videos on YouTube that explain what covered calls are. I have AIPI, which is a monthly paying covered call ETF, which invests mostly in AI stocks and then write covered calls on some of those positions, not all of them. Then I have QQQI and SPYI. Those are both Neil's funds, and I like them both. QQQI has a distribution rate about 16% per year, and SPYI has about a 12% distribution rate per year. Plus, they both have NAV appreciation. And if you look at AIPI and QDT, my NAV is actually down, but the total return is up because of the distributions. They're up. Actually, I was doing a deep dive, and QDTE is beating QQQ and SPY and everything else since I started this experiment. So I'm happy about that. I have 500 shares of GIAX. That's a Nicholas fund. Nicholas has a new fund called Blocks, and they were kind enough to send me a hat. So I don't own any blocks in this here account. I may add it to one of my other accounts. I might add it here, but I'm trying to stick to just a few ETFs to see how they do. If I add anything, I will be adding more. But my next thing I'll probably keep adding QQQI and SPYI because those are going to be my anchor funds for this account in the future. So as QDTE and AIPI, if the NAV slowly dwindles, which I don't know if it will or not, but I'm getting a big return from these. But what I want to do, I want to build these two ETFs out, SPYI, QQQI. And then when I'm done with this experiment and I'm saying, okay, I'm all done with it, I'm just going to maybe start pulling some money out or do whatever. SPYI and QQQI will be the anchor funds that I'll hang on to long term or forever. So I don't really plan on selling any of these funds. If I do, it'll be down the road after a year or so when whatever profit there might be will be capital gains. So let's keep on going here. So I like to keep an eyeball on what the stock market is doing in general. And for me, the S&P 500 is like the barometer of the stock market. And so this is SPY. I like to keep track of this every week or maybe multiple times a week and like to see what it's doing here. So this middle line is the 20-day moving average. It's above the 20-day moving average. And this is the Bollinger Band. This is the upper, lower standard deviation. And what I'm looking for here is to see if this is starting to consolidate. What I mean by consolidate is the upper and lower starting to get closer. So the other thing I'm looking at is the RSI, Relative Strength Index, and that's been pretty consistent. So I just keep an eye on this. You can look at all the technical indicators that you want to in the world, and then one news flash about tariffs or something else will throw everything out the window. So hopefully politicians all stay quiet and everything that stays out of the news. And the last time I bought something was 50 shares of AIPI. That was on July 1st. This is July 18th. I'll probably be buying some QQQI after distributions are made here in another week or so. Speaking of distributions, today QDTE paid out $644 as a weekly distribution. This is everything that's happened so far in the month of July. Down here is where I bought the 50 shares of AIPI. I had some margin interest that I paid. QDTE has paid 3 distributions in a row here, pretty consistent. I keep track of all the distributions here for monthly since I've been starting this project. Everything being equal, this should be going up a little bit as I keep buying more shares of these ETFs. That should boost my average distribution each month. Here you can see what I've done each month for the past several months since November when I started doing this experiment. This here's my favorite screenshot, my favorite chart. So on the left is what I projected, how things would go at the very beginning of this project. So this was all completed on day 1, and I expect it to be sitting at 92,000 right now. And the reality is that I'm sitting at 79,000, which is a new all-time high. My previous high was early on, back in February, just a few months after I started this project. And then, of course, we had this big dip, 49,000. So I was down 30,000 at one point. Now, since April 4th was when I hit that low, I'm at an all-time high now. So during this dip, it wasn't all gloom and doom because I bought several shares of different ETFs during that time, added to my portfolio here. You can see my margin, I was using 127% of my margin, meaning $62,000 in margin is 127% of my equity, 49,000. So this equity is if I cashed in everything and quit today, this is how much I'd pocket. So I started with 70,000. I'm at almost 80,000. So I'm up 14% since I started this project. So this is my weekly gain. So you see the 1 week down here, we were down 21%. This past week, we're up 2%, increase 0.751% each week. And people said, that's crazy. That's 45% or 42% return over a year. I'm using margin. I'm in these ETFs, some of them paying 30%. And I'm looking at return on my equity. So if I'm earning, let's say 25%, the total invested 148,000, that should really make my equity column grow pretty quick if you do the math. And this margin's costing me like $300 a month, but I'm earning upwards to 20 to 25 or 30% on the borrowed money. So to me, it makes perfect sense. Unless we had a bear market for a 2-year stretch, then it might not be so good, but I'm more optimistic than that. So I said this was about comparing these ETFs to if we would have held on to that house. So if we would have held on that house, this is probably how things would have went. So this is my rent collected $700 each month, insurance $80, taxes $200. So this was like June. So July, 700, 80, 200. And I got these cells collapsed, but into the month totals were November, January, February, all the way through. So this is what the balance would be. So like the money, positive cash flow sitting in my checking account, I would have about $3,700, let's say. And because it's a house, it's increasing in equity. I figured 4% per year. So that's $233 per month. So my equity has grown $233 per month. So that would be sitting about 72,097. So my bank account plus my equity, in theory, if I sold this house, it would be about 75,877 net. Yes, there's a lot of things I don't have included. I'm not taking consideration maintenance, repairs. If we sold the house, there'd be realtor fees and title fees and Illinois tax stamps and whatever else you have going on there. So you figure I would probably lose about 3 to 4%. I'd have to pay some prorated real estate taxes. I'd probably net, if I paid the realtor fees, I'd be 6%, like 4,200. So I would net less, probably like 68,000, let's say. In theory, it's worth about 75,000. So click here, we can see the two side by side. I did not update this, so this should be 79,000. Jump back here, 798. Okay, that looks better. But this is right. I remember updating this. So my ETFs are up by $3,900, almost $4,000. So if everything would have went as expected, this would have been up close to 20,000. But things didn't go as expected. Things went as they are. But it is what it is, and I'm happy and I'm doing okay. I'm at peace with myself, let's say. So anyhow, that wraps up this week. If you enjoy this, remember, subscribe. I gain 2 or 3 subscribers a week. Maybe you can be one of them. So we'll see you in 1 week.